So guys, today I'm going to teach you about the ICT, inner circle trader. So this is normally it focuses on how the institution works. So it's a trading, like a trading method that was created by Michael J. Hanston. So it's like we are trading how the market trade, how the market react to some setups, and that's how we trade the big market. And that's the reason because the big institutions, they're the ones that drive the market, not the retail traders, because the retail traders are there to be manipulated. For any setup, there's a manipulation, accumulation, and distribution. So we are normally waiting for those accumulation and distribution phases. So if you are trading as a retailer, know that there are many manipulations that will happen in the market for them to make more money, for them to, if they're buying for it, so for you to see the setup of sale, so that you sell, they buy in the other side. So this is all about ICT. So I'll drive you to these courses. So this is normally to focus in what it's important in this forex. There are many topics about how ICT is. Core principle. So on the principle, normally it focuses on it's like based on the how they follow the smart money. So institution control the price by using liquidity. They create imbalances and manipulating retail traders. On this understanding, it's okay. I know it's complicated, but at the end of this topic, the whole topic, you'll get to understand what I mean on that. So this is just some. It's about the core principle. So this is it's ICT is based on one simple idea. We follow the smart money. So the institution control the price by using liquidity, creating imbalances, and manipulating traders. Guys, on the third topic, it's about the market structure. So ICT uses market structure to determine the trends and direction. So on the green chart, we'll see that is an uptrend. That the uptrend is higher highs and lower low. That is an uptrend. As you can see, this is the uptrend. Higher highs, higher lows. It's like going up. It strips liquidity but going up. Here in the red we'll see the lower highs and lower highs and lower lows. This is a downtrend. So as you can see here, you determine on this side. So this one becomes a lower high because on this one is also lower, this one is also lower, but make sure, just know that some trends can sweep the liquidity, but this is the valid one. So this cannot be broken, this cannot be broken, this cannot be broken. So that's the downtrend. So on this normally, if you get to understand the trend and the direction of the market, so this one is normally on the higher time frame, which is the 4-hour time frame, and the daily time frame, weekly time frame, and maybe on the 1-hour time frame. But mostly it happens, the clear structure forms in the 4-hour time frame, or also in the weekly or daily time frame. The higher time frame, that's the clear chart. So on this side, as you can see, this one was uptrend, still an uptrend, just sweeping this liquidity. But on a downtrend, maybe in a down time frame, where you see like 15 minutes or 1 hour, let's say 15 minutes, you'll see like the price has changed the delivery to be a downside. So many people enter short on here. So this they create a liquidity to sweep this liquidity below. So this was the liquidity created. Some orders have been left here, so they just make it push it out, then they drop it. At this point, people will say it goes up. But no, there's still the liquidity. It comes and sweep it again. So people, while it is swept, people will say this is a downtrend. Then they'll enter at this point. They'll sell at this point. While they sell, the trend still continues. So be aware of this setup. So it's normally creating some setup to just get to manipulate you in the market. So this is how they create the liquidity, and this is how they trap retail traders. And for you to say, for them to make money while buy, they need to make a setup that will make more people sell. So that situation is that's why you normally say 90% of retailers lose money on the market because of that. So guys, that is number 3.